Hello and welcome. You're watching the Small and Mid Cap Show. I'm Hiral Dadia. And clearly, if you see in terms of where markets are concerned, an interesting day that continues. Let's quickly pull up the Nifty 50 on the screens and see what's happening on that front. Clearly, in terms of markets, 0.6% higher. We are above the 21,500 mark. So that sustenance is absolutely strong. Let's pull up Bank Nifty and then the Mid Cap and the Small Cap Index as well. If you see in terms of Bank Nifty, 0.3% higher. So there is some bit of underperformance coming in from Bank Nifty as compared to benchmark indices. And you have the Mid Cap and the Small Cap Index clearly outperforming the benchmark indices in trade. If you talk about the top gainers and losers in terms of Nifty 50, interesting trends is what we've been seeing. You have Tata Consumer, second consecutive session of gains that have come in there. ONGC is pretty strong in today's session. Wipro, LTI, Mindtree, Infosys, TCS, the entire pack has been leading as well. Apart from that, Reliance Industries has started to contribute after a couple of sessions. 1.5% up move coming in with regards to RIL as well, trading near the day's highest levels. What's losing? Banks, Axis as well as ICICI, I beg your pardon, are under pressure. Sun Pharma is down in trade. UPL as well as Grasim, which are trading under pressure. If you see in terms of broader markets as well, interesting names. Oil India, 11.5% up move coming in today's session. Varun Beverages on the back of the acquisition as well as the tie-up with regards to the Jharkhand government is seeing some smart moves. The stock is up nearly 11% in trade. SIS is seeing smart moves. ITI, let's pull up a 5-day chart of ITI because that will tell you what's the kind of up move that we've seen in this stock as well. Today the stock is up 7%, but if you can have a 5-day chart of ITI, there you go, a 4 to 5% up move coming in on that one as well. KIOCL has been one of the stocks which has been on an uptrend. PEL trading under pressure, Indiabulls Housing under pressure, J&K Bank also seeing some bit of profit booking. In terms of newsmakers, Satin Credit Care on the back of the QIP is an interesting one to watch out for. In fact, 6 to 7% is the kind of up move that we've seen. We did speak to the management as well. Some cooling off has happened in terms of Satin Credit Care in today's day of trade. But clearly, a lot of newsmakers. You have Embassy REITs on the back of the block that has been in focus in today's session. Nippon as well on the back of the block has been in focus in today's session. So some smart moves coming in on both these counters. So that's what it looks like in terms of where markets are concerned. But let's quickly shift focus to another stock that has been making rounds. NCC. The stock is trading higher in today's session as well. It's interesting to see that the company had given their FY24 order guidance and they've already achieved 77% of it in the first half. Now, this order build has been the order book has been driven by buildings and the electrical segments. Let's head across to Nirad Sharma, head of strategy at NCC, who joins us now. Nirad, good morning and welcome to the show.
Very good morning.
Nirad, my first question coming to you is firstly, 77% of the order book guidance of FY24 that has been achieved already in the first half of FY24. Does that mean that the company is going to overshoot in terms of its guidance on the order book?
Hopefully, yes. Well, let me add a small point of correction.
Okay.
The order inflow guidance that we had shared with the street is for 26,000 crore. And as we speak, we have already booked not 77, but close to 80% of that number, which is close to 21,000 crore. So I fully agree with you when you make the statement that we are, hopefully going to hit that number.
Right. So what's the new number expected to then look like in terms of at the end of FY24, and what do you see FY25 starting at?
It is our considered, belief that one should not change a number, quarter to quarter. That sends a very wrong signal to the market, because the next quarter, again, the same question would crop up. So it is our firm belief that, it is always helpful to talk about, a good number, aggressive number, achievable number, and deliver that number.
Right. Apart from this, if you see in terms of the segments, what are the segments that will drive this? Because initially it's been the building as well as the electrical segment, which has been a strong growth driver. Are you seeing a shift there?
These two divisions are, the two biggest divisions that we have in our company. But other than these two, we have two more large divisions, what we call, water division. In the water division, we do all kinds of water supply projects, the waste water treatment plants, STPs, this kind of stuff. Then we have one more large division, what we call transportation division. In this division, what we do is we execute metro projects, elevated corridors, the highways, these kind of projects. So these are the four large divisions we have. And it is the considered view of the management to always, have a diversified portfolio of projects. Who knows, some segment, might not be doing that well in, next few quarters. So it is better to have a very diversified portfolio of projects. And this is what we have.
Okay. Another question I have is with regards to where the Semcorp arbitration is concerned, right? Now, clearly it was awarded to NCC. Now you've received around 280 odd crores versus a receivable of around 600 odd crores. And there were plans to contest the order further. Where does it stand, and are you expecting a further upside?
Firstly, this matter is a sub judice matter. The arbitration award had just come about, couple of months back. So this is not really the right platform to talk about a possible move. And the award that has come is not for 240 crore, but 198 crore. And as is the judicial process, there is a window available to each party to file an appeal. That is for about 90 days. So we are in the process of studying the judgment and charting out the next course of action. We have already consulted, few experts from this field. And once we are able to take a view, we would be very happy to, come to your show and talk about our possible next move.
Overall, if you see from a business perspective, clearly smart metering, tunnel, high-speed rail, these were a few of the segments where you were expecting strong order flows as well in the second half of FY24. Clearly, what does the bid pipeline now look like for the third quarter?
Third quarter has almost, come to an end. We are already, this is already 20th December. So what is remaining is only 10 days of this. We have already made a couple of announcements of the orders that we have received. And if we take those orders into account, we are sitting at the highest, order book that we have ever reported in the history of the company, which is 62,349 crore.
Okay, so that's correct. So that's the order book. What I meant to say was not the third quarter. I beg your pardon. Was at the in terms of the fourth quarter as well. Which of these segments are you expecting a stronger order flow?
As I shared with you, we have already achieved about 80% of the budget that we had shared with the street. But to answer your question specifically, we continue to see healthy pipeline of projects in the building space, in the water space as well. Electrical T&D, we continue to see, a healthy pipeline of projects. And we hope that, the same trend continues in the fourth quarter as well. But we are not worried because, as I shared with you, we have already booked what we wanted to book. So we are very comfortably placed as we speak.
Overall, from a capex perspective, you did increase it in the second quarter, and that was for a tunneling project, if I'm not mistaken. By how much do you plan to further increase capex by in the remainder of the year, and what would it look like in FY25?
Yeah. For this tunnel project, definitely we will have to, incur some capex. But this capex won't come really as a debt on the books of the company. Once we start the tunneling portion of the project, all the capex would be expensed. What it really means is when we raise the RA bills to our client, all these would be expensed in those RA bills. So as and when as per the milestone of the project, we will have to incur this capex, and this project is required to be executed in 5 years. And the O&M is for 10 years. So we have, some time at our disposal. Currently, the project is in the, engineering stage. Then, we will have to possibly incur this capex sometime early next year.
Right, so I think interesting facts that we are watching out for as well. The order book already at 62,340 odd crores is what we are aiming at, looking at, and 80% of the order inflow guidance of FY24 is already achieved. So there is a possibility that the company will be overshooting on the guidance, which will be good news for investors as well. Thank you, Niraj, so much for joining us on the show and sharing your views as well. So clearly, NCC, a strong mover that we have been watching out for in terms of the infrastructure space. As we speak. But moving on to an NDTV Profit exclusive now. Blackstone has sold stake in Embassy REIT, and this is at a price of 316.10 per share. Saloni gets us exclusive details of who the buyers are of the stake. Saloni, what do you have for us?
Right, Hiral, as you said, that Blackstone has sold 23.5% of its entire stake, in Embassy REIT. And what we've gotten to know from the sources is that Blackstone has raised about $850 million, which is about rupees 7,100 crore, by selling, shares at rupees 316 per share. And the likely buyers are Capital Group, Fidelity, Bain Capital. Now, they are the existing investors in Embassy, and they have upsized their stake in the REIT through this deal. And one new investor that has entered through this deal is SBI Mutual Fund, which did not have any stake till now in Embassy REIT for that matter. So that is one of the new investors that has entered through this block deal. And now with this, Blackstone has overall sold this entire stake in Embassy, which it had actually planned since the start of the year. So that's the details that we've picked up from our sources.
Right. Thank you, Saloni, for getting us the details. If you see in terms of the stock as well, slightly flat. But let's just pull up a longer-term chart in terms of what an Embassy REITs has given investors as well. If you can just have a YTD chart or a one-year chart of Embassy to understand the kind of moves. Today, pretty flat is it that stock is trading. 1 year, no major moves that are coming in here. It's a 0.5% downtick that we've seen. So it's a pretty volatile one that we've seen. 7,100 odd crores is what the company has raised. New investors, as Saloni was mentioning, are names like Bain Capital, ICICI Mutual Fund, HDFC Mutual Fund. These are few of the ones who are either, and HDFC Mutual Fund is among the ones who is exiting as well. But let's quickly slip into a short break. Up next, we will be speaking to the management of Cantabil. Please stay tuned. Welcome back. India Shelter Finance Corporation makes the D Street debut today, listed at a premium of 25% to the IPO price. Let's quickly hear into what the management has to say on the day of listing.
Actually, India Shelter believes in strong strategies when it's about execution. So the strong structure has been created across 15 states where we are operating through 15 branches. So we have a lot of scope going deeper into the geographies where we exist, as well as productivity is an important drive, which is paramount for us. We continue to, deliver on the productivity side. That is a thought. So I think it's a long runway, and fortunately, market is very great if you talk about in a housing sector, typically tier 2, tier 3 segment, which we cater. So I think we are quite optimistic about a future also. And yes, last few years has been great, thanks to God. And the market, which is important typically for the segment which we are dealing into, the salary segment, the income segment, which varies from 25,000 to 50,000. They are the people who actually are very clear building their houses, put a lot of equity, and excited about it. So a lot of roller coaster which is supporting this piece, I think will lead to a good results in future also.
So the industry perception is that affordable housing loans are one of the safest lending products. But we have seen some reports coming in that there are early signs of delinquency that we might see in affordable housing segment. So are there any concerns on that front at India Shelter Housing Finance?
Yes. When we say the affordable housing is considered the safest segment, it's a reason because there's a lot of equity from customer side also. And this has been observed. And this is the first and foremost dream for anyone to build their own house, own shelter, where we, take a support from, they take a support from institutions like us. So if you see, there are a mixed report around which you talk about it, but I think these reports majorly cater the larger cities, larger towns, if you talk about. So you go to the real markets, which are deeper inside, basically in Indian geographies, there you find a real Bharat, which we cater. So we don't cater the suburbs of larger towns or cities. In fact, we go deeper into geographies where we find a quite cushion because of one, the equity from the customer side, and one, the growth prospect which is coming there.
So no delinquency, rise in delinquency, or any signs of any kind of stress building up in the tier 2, tier 3?
So if we see the March numbers last year and if we see the September mid numbers, so you'll not find much of a difference around that piece. I think there may be a couple of pockets here and there, but largely the number remains intact till now, and we are quite hopeful in future also.
So what is your sense on the borrowing cost? I believe it stands at around 8.3 right now at the end of FY23. But considering the interest rate environment and the liquidity conditions per se, do you expect the borrowing cost to rise for India Shelter Finance Corporation here on?
So we have a support from National Housing Bank that is always there. We look for a long-term funding. And Treasury team has worked stupendously well. Where the rate has gone, repo rate has gone up to the 250 bips. Our rate has been hardly get affected by 15-20 bips. That is one piece. Now, after Fed giving some cushion, I think that's going to impact Indian market. That is the optimism which I'm thinking of, right? Otherwise, but if you see with listing also, there is always a scope, and we would look forward and request rating agencies to relook our rating, and even the larger institutions and some other treasury venues which comes out where I think the cost of fund we would like to take it up, keeping in either the same level or maybe a little down.
Right, so that's the management of India Shelter speaking to NDTV Profit. But moving on, Cantabil Retail, that stock is in focus. In fact, if you see the company, it's trading with cuts today, rallied over 15% in the last 6 months. Now, retail as a space has been in focus as well, right, taking the festive season into consideration. But let's head across to the management to understand their expansion plans and what their milestones are. Joining us is Shivendra Nigam, CFO at Cantabil Retail. Shivendra, good morning and welcome to the show.
Good morning. Thank you. Thanks for calling us. Thank you.
Always a pleasure to speak to you. Shivendra, my first question coming to you is, how has the festive season been? Because October, November, both of them, it was broken up. December, taking Christmas into consideration and the kind of sales that you see, what has your view been?
So overall, as a retail, we are looking forward. We all as a retailer looking forward for the festive season. Festive season was quite a decent one. The growth what we expected was almost reached those numbers. So overall festive season starting from the Diwali was good. December started in a decent manner. And we are expecting a good sale in the coming months as well. So overall targets we are meeting. Overall, whatever the growth plans were there, we are meeting. The consumer has put the most important part is that for the our business, few KPIs are very exciting. So few retail KPIs are very exciting. So overall things are in control, things are fine, and overall it looks like that going forward things are started from the festival season. It's going to be good.
Okay. So from here on, clearly you have a target margin of around 55% that you have indicated earlier, and a revenue growth of 18 to 20%, EBITDA margins in approximately 18 to 19% growth in the next 2 years, and PAT margin of around 20% in the next 2 years. Is that something that you maintain, or do you think that could be revised upwards?
So we did not revise any of our targets over a long-term basis. So as we started, we are expecting the growth of 18 to 20% in this financial year as compared to last year. And going forward on the same plan, we are doing our growth on the same way. We are opening our stores as well in the same way. So the overall target for the companies are same in terms of sales revenue, growing at the rate of 18 to 20% to make the company a 1,000 crore revenue company by FY26 or mid of FY27. As far as margin is concerned, yes, target is same as far as gross margin, 54-55% we are going to maintain the margin. As far as EBITDA margin is concerned, yeah, 80 to 20% is the target. This year, slightly 1% up and down will be there. And the PAT margin, what we discussed, I'll just make a slight correction, is not 20%. That's the EBITDA we are targeting for 18 to 20%. And the PAT margin, 11 to 12% on a longer and sustainable basis will be there. So all the margin and expansion from the company are same, and we did not revise our targets.
Okay. So overall, if you see the discounting patterns, the second quarter had more discounts because of muted demand, right? Taking that into consideration, how have you seen the second half of financial year 24? If the discounting will come back to normal, and if that happens, what will be impacted?
So in our case, we did not change our any long-term sales strategy, including our discounting scheme, right? So yes, there was a slightly a period we have been released, say for a 1 week or 2 of the existing discount scheme to clear the inventory. So that's overall the basis. First half, you can say slightly on like earlier our margin last year was gross margin of 56%, but this year we are considering on a long-term basis 54 to 55% because some up and down curve is there in the market. So second half, we are expecting our normal discounting scheme, our normal schemes as far as business is concerned. So overall margin, what we have been discussed about gross margin, which is going to be maintained. So overall, we are not changing our any of the pattern and plan in terms of sales strategy or discounting scheme. So that would be that.
Right. Shivendra, in terms of the regions, the focus has been North India, where 55% of your revenues come in from the north. What's the expansion plan looking like for the remainder if you look at Central, because that's the next one where we have seen higher contribution?
Correct. So overall expansion plan is concerned, we are opening around 80 to 90 stores every year, and the same plan will be continued. There's a major, we are in 20 states now, except South India, main 4 regions we are being there, and immediate plan for next 2-3 years to be concentrate on these areas only, 20 states being there, and 250 plus cities. So yes, North we are already there, Central we have been expanding, MP we have been expanding. And as far as Western is concerned, I think Mumbai and Gujarat is the next for us, which already we are having approximately 80 to 90 stores are there. So these are the splits. So overall expansion, except South India, would be continued. South India will be looking after 1,000 crore. Our target is that there will be entering after you can say 2 or 3 years. So expansion plan for the company on an overall pan-India level will be as it is, which is like now, and South India probably after 2 to 3 years.
Okay, and so clearly from what you're saying is that the demand is robust. You're looking at an aggressive store expansion strategy as well. There is category extension that we are seeing as well in terms of your business. Taking all of this into consideration, you had mentioned earlier as well 1,000 odd crores by FY26 is what you plan to achieve in terms of revenues, because that's what I read somewhere in one of the brokerage notes. So is that a number that you're targeting?
Absolutely. FY26 as a clear company target is to make the company the 1,000 crore revenues. FY26 or mid of FY plus minus 5-10% is not a big deal. So FY26 is our first target to make the company a 1,000 crore revenue with a sustainable margin as of now.
Okay. And very lastly, would you be able to maintain your return ratios, or do you think you will be able to, increase, better them from here on?
So, like if you say, we are working on the ROC approximately 37-38%, and on a longer basis, these were in the intact margin, because gross margin is very important, which is their target, maintaining it to 53, 54, 55%. Then all the ratios like ROC and ROI is going to be maintained, 38, 37% approximately ROC, and all the margins. So that's the long-term plan for sustainable.
Right. So this is going to be an interesting one. In fact, recently as well, you had BofA Securities Europe SA, which picked up around 2.87% stake in the company as well. And clearly, what brokerages are indicating is that there could be a re-rating candidate that could be on the anvil if all of the targets are maintained. Thank you so much for joining us on the show and sharing the views. So that's with regards to Cantabil Retail. But completely out of time. That's all that we have on the show for now. Stay tuned for more updates on NDTV.